Good morning, everyone. First of all, I would like to say a huge thank you for everybody that followed in person or online or live event on Friday. It was an amazing day. I felt really good for the whole day, and you are amazing people just around us. Huge thank you to everybody, and I hope you felt the same what we did because that was a huge success. So slowly we're gonna get the recordings and everything, and we're gonna start processing them and one by one probably, but we're gonna get out the material so you can rewatch, review, share, and discuss with anybody that didn't know about it maybe. So you can send out a little bit of message about trade on the market and how trade on the market is thinking seriously what it's doing. Speaking about thinking seriously, we are going to make some changes on the pro server, and that's not about changing rooms or changing the service itself, but what we're going to do is a little change in focus. So first of all, the live stream, what we do every single Monday and Thursday, we're going to change just a slightly little bit. And the change is that as you know, every Monday we do that deep fundamental analysis and technical analysis, that we're going to do the same. So the major fundamental analysis will be on Monday, and then when we turn to Thursday, if we need to update anything in the fundamentals or in the numbers, we will do that. But in general, on Thursday's live stream, we're going to focusing on technical charts and making sure that we follow up the Monday update, and it's going to be a little bit easier for you to digest the material. And at the same time, I hope that you guys are going to start focusing a little bit more for the market sectors, what you're following, and for the assets as well. I can take more focus on those assets that you follow, and hopefully we're going to communicate a little bit more, a little bit better in the future. So that means we all are going to benefit from that story. At the same time, all analysis will be more focused, and also I would like to design those analyses for really the assets what you're following, because we can make you 1000 analyses a week, that's fine, but if we do the assets but you don't follow and you're not really interested, or you can't access from the country where you are, then it's not going to be very beneficial for you. I mean, it's very nice to hear that something is going very well or something isn't going very well, but it's really important to make sure that we are talking about the assets you are interested in. So that is going to be a process on the pro server, and we're going to make some changes as well. We're going to strengthening some of the market sectors. But in the meantime, there is a lot to talk about today because, well, I think that everybody heard what happened 2 days ago in the Middle East, and obviously this is a kind of concern on the market with several other things. So let me just go through, as we did in the old times, very quickly the 6 main drivers, and just let you know what the updates are, and because we needed to do some changes in points and everything. So first of all, the macroeconomics. Before we go to what happened last week, I would like to highlight this week to you because it will be very important. On Monday, so on today, we're gonna get US core retail sales and Empire State Manufacturing Index, which is extremely important and rare that we're gonna get such a data on Monday. So be very careful with the US market. It's not a usual Monday, and we also got a lot of things to digest as an information over the weekend. So it probably, or I would say that it should be a very intense Monday. And as we go into the week, as you can see, the UK will follow the United States, and we're gonna get the so-called UK version of non-farm payroll, which is a UK claimant count change average earnings index. I'm sorry, I doubled up the claimant count change in the chart. That was my mistake. And we're gonna get the UK employment rate as well. And then United States coming with an industrial production, which will be very, very interesting and extremely important data right now because of the geopolitical concerns. We are strongly watching whether the United States start to increase its military industrial production or not. So we gotta follow that down. At 7 p.m., there will be a BOE Governor Bailey speech, which is very important for the Bank of England and, of course, the British pound. And at 7:15, Fed Chair Jerome Powell will hold a speech. Also, again, very important, and you know what that means usually for the market. It will be in the late hours, so we will see how much the market is ready to go sleep, or we're going to get some more movement. But the next day, we'll continue with the UK CPI numbers and then the European CPI numbers, and a little bit of UK speech again. Bank of England Governor Bailey will speak. Thursday, Australia, United States, and that is a really interesting pair for the day, because the Australian dollar is one of the currencies holding itself technically on the best possible way we can experience right now, but I'm going to show you that a little bit later. And then the United States will answer with a couple of important information, such as unemployment claims, Philly Fed, manufacturing index, and the US existing home sales. And then on Friday, we're going to get Japanese national core CPI, UK retail sales, and German PPI. So very heavy data week, and it's not going to be quiet, especially because, as you can see, this is the macroeconomic field, and as I said, the geopolitical field is again heating up, so we got to be very careful. Now, just a quick look around what happened last week, because obviously we were very busy last week, and I haven't got a chance to update you on the macroeconomic data. So as you can see, the German industrial production is improved to 2.1% from 1%, which is important to watch. I had no time to get into it deeply, because obviously we was organizing this event. So I promise you this week I'm going to look after why the German industrial production could possibly jump 1.1%. And I don't want to find something, and I hope I will not, but if I will, I'm going to let you know whether it's military production or not. If it is, then we should not expect the European military situation is declining anytime soon. I just wanted to let you know. On Tuesday, we had a very quiet day with the Japanese consumer confidence, which was going up a little bit, probably because of the rate hikes, and probably this sent a message to Japanese people that, yeah, we are on the track and we might be late a little bit, but we started to, fixing the issues and things like that. So that's positive, but unfortunately, if somebody's thinking about the Japanese yen, I'm going to show you the chart so you will understand why and how the DXY is still dominating over it. Now, a couple of important information came on Wednesday, such as the Chinese CPI and the PPI was in a very interesting situation. The CPI was declined to 0.1%, but I'm glad to see that it is not under 0.0%. Hope the next data is also not going to be underneath that number. The PPI declined just a little bit from minus 2.7% to minus 2.8%. That's not the best news, but we know exactly what is happening in China. So they started to ramp up the production on a very unusual way. In the meantime, they are printing a ton of money. So yeah, that probably the plan of the saving. The New Zealand official cash rate remain at 5.5%. No surprise here. We talked about that earlier. But the Chinese new loans came out a little bit higher than expected by me. And I'm very glad to see that the Chinese government is realizing that the amount of money they printed in the last 3 months is not going to be enough, and the world is not reacting on a very active way in terms of the Chinese, economic start or restart. But there is also no surprise here, because the world is not ready for having a very healthy economy right now. So US core CPI is remaining at 0.4%, but this is not like it didn't change. That means that we are increased again with 0.4%. So this is a huge number, and that's a threatening inflationary number. Meanwhile, the yearly CPI came at 3.5%. This is an increase, and because it's a yearly number, the 0.3% what we got increase, it's too much. It's just way too much, and the Fed is not going to be happy with that. But we talked about that last week already. Now, Canadian overnight rate is 5%, remaining exactly the same, and those markets are very disappointed because everybody expected some rate cuts, but yeah, as I mentioned earlier, we're probably not going to get this. Same situation on Thursday with the European main refinancing rate, it remaining at 4.5%. I mentioned to you that as long as the Fed is not able to cut rates, the ECB is not going to be able to do that also. So US core PPI and normal PPI, both of them with monthly data. We see some decrease here in terms of the speed of the increase. Now the new data on the core becomes 0.2%. But at the same time, I need to let you know that that number is lower than the previous, but it's still increasing. And the normal PPI becomes 0.2%. So it's slowing down in increase, but it's still increasing. And that's still inflationary. Now, there's no big change in the unemployment claims, so it's been 222K and become 211K. A little bit of decline, but it doesn't really, counterbalance the negative effect what we got from the inflationary numbers so far. UK GDP on Friday became 0.1%, but don't forget this is a monthly data, not the yearly or not the quarterly data. UK industrial production ramped up to 1.1%. Now, this is the interesting one because I mentioned to you that Germany is increasing to 2.1%. And then we got the UK is also increasing to 1.1%. So I really don't want to see that this is military increasement, but I have an idea about that. So I need to look into it definitely this week. Now, consumer sentiment is, it's declining because the previous data was 76.5. But then they revised to 79.4, and the new data is lower than the revised data, 77.9. So we have a little bit of decline here. No surprise, increasing inflationary data came. And according to that, the preliminary inflation expectation became 3.1% after a 3.0% revised to 2.9%. And then we got the increase here. So even the US people thinks that okay, this went out of hand, and we are at least until this moment we are not able to control the rising inflation again. So this is pretty much almost what we expected. The ETF and the index market got a negative reaction for that, or a negative effect for that. Meanwhile, the commodity market is getting a slightly positive effect. The Forex market is negative, and the crypto market is slightly negative about that. And this week's expectation is almost the same, apart from the commodity market, which was slightly positive last week, and I'm expecting a neutral this week. The crypto market was slight negative last week, and I'm expecting a little bit more negative from the macroeconomic side. So interesting developments. As you can see, we have a negative main narrative from the macroeconomics. And that's important because the second thing we need to take a look at is the geopolitics. Because we got changes, not big changes, but the situation is not improving at all. And as you know, Israel says that 300 Iranian drones and missiles downed in unprecedented attack. That was a very unfortunate situation. At the same time, I need to express just a little bit that Iran was very kind with Israel in this attack, because the capability of Iran and the Iran proxy groups are way, way higher than this. So for me, this is a little bit, looks like it was a show up, and there was no intention to harm Israel on a very harsh way. But at the same time, I need to let you know that I am 100% against war. I do not support any side. But at the same time, I like to think realistically. Now, that was an Israeli attack on an embassy. And I'm 100% sure that Israel has its own explanation and reasoning why did they attack the Iranian embassy. But at the same time, if you attack an embassy of another country, then you are declaring war. So you are the one to make the first step to declaring war. And therefore, Iran is just, if Iran doesn't respond to that, that means that Iran, it will look very weak on an international podium. And therefore, they had to react something. Now, this kind of attack, as I mentioned, that it was a little bit looking weak because most of the rockets and the drones flied over and become, let's say, invalidated on the market language, over in the air by the US, UK, French, and Israeli air defense. And so what's strange is that they actually managed to hit one military base in Israel on a very south part of the country. And there was no casualties, there was no death. The military complex was almost empty, and this is a little bit smelling to me. So it seems to be that the United States is playing a very, very huge role in the background and probably gave a green light to Iran, giving the opportunity to answer somewhere, but making sure that the answer is not creating any more trouble what we have so far. Now, I'm not saying this is the situation. It's not going to escalate any further. It probably will, but it depends on what's going to happen in the upcoming days and weeks, because Israel is obviously now blaming Iran to attack Israel, and that they says that they crossed the red line. Now, that's the point when I'm thinking realistically that, to be honest, in the direction of Iran, Israel is the first. It's crossing a red line. I mean, we can go back to, I don't know how many hundreds or thousands years who started, the confusion, but it doesn't really make sense in the terms of the current environment what we are living in right now, especially in the Middle East. That was towards Iran. Israel was the first to respond in a very harsh way. So it's a very interesting situation, but I had to push a really, really big negative change in the Middle East, especially for the Forex market. And we already got a very negative effect on the ETF and the stock market. So it's a big change. I'm going to show you with the points why. But before I show you with the points, I need to let you know what's going to happen, because earnings season is coming. So it's just thinking just a little bit. So we got a macroeconomic environment which is not improving at all. And there's a huge probability that it's not going to get any better anytime soon. So we should expect that the macroeconomic effect on the market, it will be a little bit more negative as we are going into the year deeper. Here is the geopolitical situation, which is, it's looking strange, but at the same time, it's not improving at all. So again, that's something that, we should consider as a worsening situation. And I mentioned with the macroeconomics data that we're experiencing improving industrial production. And if we're going to get the results in the next 2 to 3 months that this industrial production is actually military-wise, then it's not a good news for the geopolitics, because that proves that the geopolitics will not improve in the next not only 2 to 3 months, but in the next 1 year, which is a little bit scary, by the way. So on top of that, we're going to get a corporate earnings season right now. So it's going to start. So we're going to see how the first quarter is acting. And I already made my prediction. Yesterday, I was working a lot, investigating the companies, checkouts. All day, I was working very hard on the stock market and the companies as well. So I tried to investigate as much company as I can and made my prediction for the Q1, Q2, Q3, and Q4. It's not looking very bad, but it's not improving at all. So first of all, I'm expecting Q1 in the finance sector being negative, and then in the Q2, Q3, very negative, and maybe the Q4 will improve a little bit. If everything stays on the track where we are right now, this is the prediction. If something is changing, obviously my prediction will change as well, because I am not God, so I don't know what's going to come in the future. But if everything stays on that track, this is the most probable scenario. The health sector is expected to be mild positive in the Q1 and then positive for the rest of the year. The tech sector is expected to be mild negative currently. And then probably as we're moving into the Q2, we're going to see some more negative developments. Now, the Q3 is written as mild negative and maybe Q4 is positive. And I give this very optimistic view to the tech sector because I see how it develops in the background. So yes, the hype is there, but at the same time, real developments, real economy is building around the tech sector right now. And if that is going to be successful, then there is a chance that in Q3 it could start improving. Unless we got some very drastic situation financial wise, and it's going to be prevented by the financial world. So it's not very certain how the Q3 is going to be, but I'm pretty confident that the Q1 and Q2 has a very good prediction. Retail is meant to be neutral in Q1, but then turned into mild negative in Q2, negative in Q3, and mild positive. So some improvement we can see in Q4, maybe at the end of the year. If, again, the geopolitics are not, are not going into a very bad direction after that time. Consumer services expected to be mild negative, and then Q2 negative, Q3 negative, and Q4 is neutral. Transportation is mild negative, as according to my expectation, and then it's going to be mild negative on Q2, Q3, and then a little bit of improving in the Q4. And then energy sector is expected to be very positive, and then Q2 very positive. And then we're probably going to fall back a little bit from Q3 and Q4 if there is no more escalation of war, because if there will be, energy sector will be probably very positive on that part as well. So as I said, this week the earnings season is kicking in, and I just brought some of the very important companies that will reporting earnings this week. And interestingly, financial sector will be very hard at the beginning of the earnings season. So Monday, Goldman Sachs and Charles Schwab. And then on Tuesday, United Health, Bank of America, Morgan Stanley, Bank of New York Mellon, which is very important for the crypto guys because the Bank of New York Mellon is one of the biggest bank to support with its services, the Bitcoin ETFs. And if there is any problem with the Bank of New York Mellon, well, your Bitcoin ETF might be in a little bit of trouble. So just let you know that this is something if you are on the crypto and you worry about the Bitcoin price, that's something you need to watch. I understand there is Bitcoin halving and everything is going on right now. Hong Kong is just accepted Bitcoin and the Ethereum ETFs. Very, very positive. But at the same time, halving is not sure is going to be a positive effect. And the Bank of New York Mellon is a threat to this ETF if there is any problem with the company. And I'm going to show you the chart today so you will understand what to watch and why to watch. And also on Tuesday, United Airlines Holdings will give the corporate earnings. And then Wednesday, Arcor, which is a mining company. If somebody is following the commodity market, knows exactly what this company is and why we are following. Thursday, Taiwan Semiconductor Manufacturing Ltd, Netflix, which will be very important, and I would like to highlight Netflix earnings. There's some trouble could be there, but we need to see the numbers first. And then Blackstone, American Airlines, and Alaska Airlines. So these are the big guys this week on the earnings season. You better to watch them, and I'm going to show you a few charts of them as well, so you will understand how we are reacting. But if you have any request about that, if you have any question about those companies or why they related or how they related to other market sectors, let me know in the Discord server and I will be more than happy to help you out in that question. So that's what's coming this week, and it's very important. There is some changes in news as well. For example, the ETF and stock market is moving into a, relatively neutral but rather negative way. So the bubble concern right now is much bigger on the stock market than the bubble euphoria. The rate cut euphoria seems to be disappearing, and the longer high rates concern is strengthening in the news. Meanwhile, the improved job report is still a main narrative in the news outlets, so they don't talk about the job cuts and they don't talk about why the job report is better than expected in this time. And obviously the Middle East is bringing a new black point on the market. So overall, I need to declare something, and this looks like official by now. You might didn't hear that on YouTube or media or anywhere else, but I am pretty much confident to say at this moment that the AI mania is over. So it's ended, it's done, it's gone, no more. No more AI mania, no more monkey rallies because of AI. If you see something is rallying, it's not because of that. Now the question is that, is there any more reason on the market to rallying for? Or are we really topping now and probably going to see some more corrections to the downside? That remains a question, but that's why we are here to investigate the market every single day. So we're figuring out what we are seeing right now in the market. Now, commodity market is changing just a little bit, but not too much. We got some improvement in the food sector, and I'm really glad to see this. And we will see how it develops with the overall points. The Forex market, however, is in a deep trouble. And the Middle East didn't help to that, because the Middle East itself doesn't really hurt other currencies, but it really hurts those who try to short the US dollar, because obviously this is very positive for the US dollar, and it is very positive for the energy market as well, obviously, especially for the oil. So let's see how this thing is going on, whether the situation is escalating or not. But this environment is very negative in terms of news narratives on the Forex market. Crypto market, I misspelled, unfortunately, Hong Kong, and I do apologize for everybody that lives in this area. I was very tired yesterday when I was completing this document, so sorry, it's not Hong Kong, but it's Hong Kong. But Hong Kong approves Bitcoin ETF and obviously Ethereum ETF as well, which is, by the way, historic because we didn't see that before anywhere else. But the Bitcoin halving is expected to be on 15th of April, 20th of April. And obviously there is a very interesting point on the crypto market, and that's the Middle East. Now, something I did not exactly expect it, but it wasn't that bad, is that the crypto market is able to react to the Middle East very negatively. Now, we hearing that the crypto market is the savior of the markets, because that's, as one of my team member, Mergit, said on the chat yesterday, that, hey, there you go, the digital gold is Bitcoin. And then the digital gold is shitting itself because if there is some problem in the Middle East. Yeah, that's just kind of proof that Bitcoin has nothing to do with the kind of thinking that it's digital gold. This is an asset which is very, very good to trade. Sometimes very good to trade on longer terms as well. Most of the time is very good to trade on short terms. It has some essential value in terms of how people think about it, how Bitcoin can help to, curve the future in terms of the financial world. But it is not good enough to be any kind of digital gold or anything like that, because it's reacting exactly the opposite. So yeah, it's just a reminder. I know people don't really like me to say that, because that's not what the narrative says most of the times about Bitcoin, and I'm not going to be very popular with these things. I'm not saying any bad thing about Bitcoin, by the way. So I think people just misunderstand that I do not think anything bad about Bitcoin. I'm just correcting people if they're thinking on a bad way or in a wrong way, what they're thinking about it. And I think this is the point, what they're thinking bad. Because the crypto market, including the Bitcoin, is reacted immediately and extremely negatively for a very, very sudden and very bad geopolitical news, which is not what a gold is doing, because gold is doing exactly the opposite, is reacting positively on that matter. So I don't think we need any more proof to talking about those stereotypes, but everybody will decide by itself. But overall, the news dropped back a little bit on the crypto market as well. So here is the market sentiment, which is, it's not interesting, is drastic. So first of all, let's see how after the last week, we got the new market sentiment points on the ETF and the index and stock market. And so as you can see, the financial world is declining very, very badly. And as I mentioned, so by the way, this is one of the worst sector on the market right now, on the stock market. But please don't be surprised. So we are ahead of an earnings season. And obviously, it could be the earnings report from most of the financial company that it can no longer hide that there are serious problems in the banking sectors. And if that's true, the market is trying to react overhead, and therefore the exit prior earnings strategy is working on the market, and that's what we are seeing. The health sector is declining just a little bit, but not too much, but remaining in a very negative way. Tech sector doesn't really change. It was reacting just a tiny bit negative, especially on a Friday, but remaining in a very negative territory right now. In terms of the sentiment, of course. The retail sector is also doesn't really change too much. It's almost unchanged, but it's remaining in a negative territory. Consumer services are declining just a tiny, tiny bit. Meanwhile, the car industry is declining a little bit more than other sectors, apart from the finance. But it's not that negative as the rest of them. Transportation is declining and moving towards to more negative. And the energy sector is declining as well, but it's remaining in a very positive way. At the moment, we only can see that this sentiment is probably because of profit taking, and that's all. So commodity market, the essential foods are declining big. I think this is profit taking in terms of the market sentiment, because the non-essential foods are increasing and moving further to the positive territory. Energy market is improving. That's really, really good. And that's one of the proof why I think that the stock market having a profit-taking period, and then after, if the energy market remaining strong this week, they will push back the energy market on the stock market as well. So precious metals, I don't need to over detail what the hell is going on there. Now, this is gold. It is including digital gold, physical gold, every single gold. This is gold, okay? So that's what it's reacting on the way it's supposed to be. So it's extremely positive, and no question at all. So that's the saving thing. Industrial metals, interestingly, declining just a tiny bit, but remaining slightly in a positive territory. I would like to still highlight that as long as we don't have proof for demand for industrial metals, it still should not be considered as a beginning of a big trend. It might be is. I'm not saying this is not a beginning of a trend. All I'm saying is that we need the proof, the fundamental proof that it will be. And that's what I'm searching every single day for you. I'll let you know. And that's why I want to see whether the industrial production in Germany and other countries, especially in the UK, is increasing because of the military industrial production or for something else. That's a really important information there. And also that's why the US industrial production data is extremely important to us to see what the hell is going on and why they are ramping up the industrial production. And livestocks are declining further into negative territory, so nothing good is coming out from this market sector. Turning into Forex market, this is more than a disaster, I'm telling you. So the dollar is up. It will be more up probably, but it is extremely positive. And as you can expect, the EXY reacted in a very negative way. The Japanese yen couldn't hold any longer and made a more lower rate. And that's a very bad news for the Bank of Japan, especially after a rate hike. The BXY is declining from neutral to a very negative territory, couldn't hold anymore. The QB is declining from a slightly negative to a more negative territory. By the way, this compared to other currencies, this is a kind of nice decline. So I would say that probably the New Zealand dollar is way stronger at the moment than the euro, for example, or or the British pound. And if that remains on that way, well, it could provide interesting opportunities on those currency pairs. Now, the Canadian dollar is, well, it got a really, really big hit. Canadians are really struggling right now, especially in the parliament. And probably this was the moment when the shit hit the fan. So all the environment, what we saw around the Canadian dollar, is just went all together. And the dollar said that, okay, thank you, I'm not playing this game. Extremely negative. The Swiss franc is moving into further into negative territory, but remaining relatively resilient. It's very negative, so don't get me wrong. It doesn't look any good. But for example, compared to the euro, it's not as negative. And here is the Australian dollar, which is moving from a neutral territory to slightly negative. But it's not that bad, and you will see on the chart that it's actually very resilient right now. Actually, one of the best currency against the dollar is the Australian dollar. So interesting development here. And so here is the crypto market. Obviously, from a positive territory, we are declining into a very slightly, but really just a very slightly negative territory. So it's not too bad, but it's negative at the moment. So we need to keep an eye on that. Okay, so that was the market sentiment and psychology, and the technicals we're gonna see through with the chart. So let me just explain to you the points where we're up to right now. So here is the ETF and the index market. As you can see, the macroeconomics are declining, and that's because of the increasing CPI. Geopolitics went into minus, or stayed into minus 10. By the way, I didn't know what's going to happen, but I felt at this point that yes, on the last meeting last week, I had to decline the point from minus 9 to minus 10. Now it seems like a perfect decision because we got the confirmation for that. So at maximum negativity at the geopolitics, which is, it's not good at all. So in terms of the market, it will create some opportunity, but this is not good. So I'm not happy with that. Corporate earnings is unchanged at minus 7, but as I mentioned, it's starting now. So this point probably will change. The question is on to which direction. I have a guess, but it remains in a negative territory so far. Market news and events. Obviously, when news outlets are reporting about flying bombs, it's not good. It's never good. It's never going to make people happy. I mean, there are some people going to be happy about that, but those people are sick, and you should let them know that they are sick and not accept their opinion about being happy of a war. It's never happy and never good that people are dying. And luckily, on the weekend, at least by these attacks, nobody died. By the way, a very interesting report just hit my eyes this morning, because everybody talks about Iran was attacking Israel, and no death reported from this attack, this particular attack. Of course, other region will have its own deaths, unfortunately. But at the same time, in a country which is meant to be the free world, which is meant to be the country of opportunities, this is the United States, only on this weekend, 41 people has been shot. And 7 of them has been killed. So there are more deaths only in Chicago, by the way. Sorry, I forgot to say this. It's not the rest of the United States. That was only in Chicago. So that's one town in the United States has more death on a regular day than in a war in the Middle East, which is, I don't believe we are going in a good direction in terms of how we're thinking about life. Okay, so I'm not happy about that situation, but obviously the market is not happy either. So the point is declining from positive 2 to minus 2. That's a huge drop, by the way. That's a 4-point changes within one day. And so market sentiment is obviously declining from 3 point in positive to 3 point in negative. I don't think that I have to over explain that, because on Thursday, Friday, we got so bad data, macroeconomic data. You saw how the market was reacting. And obviously the market at this point on Thursday and Friday, they knew that Iran will attack Israel. There was no question. Actually, Iran was warning its neighbor countries 72 hours before they were started to attack. That's why I was able to write you on the Discord server that hey, that something is going on, something will be and expected very soon because we got the warning. And so it happened. So the market is next to the negative macroeconomic environment is tried to price in some more tension on the Middle East as well. And this is the reason why the huge point drop on the sentiment. And here is the technicals. Obviously, it wasn't negative either on last week, but now we're going down from -1 to -3, and then we will see the rest of them on the charts. The only one thing you should not forget that it's not that bad. I mean, 1 point here, 1 point here, remains unchanged, but some of the areas are really changing with big points, and that made the overall point declining from -25 to -38. Now that's a big one. So, and this is the overall point. So the overall point is a kind of volume on the market. Let's see that this is the volume of the overall sentiment on the market, and it's strengthening, and it's strengthening on a negative way. So be very careful, because when we're gonna start getting informations about the options market, for example, that it's accelerating to the put side, you probably got all the confirmation what kind of trend we are dealing with. So this point is trying to get at the front of the market, so it's trying to represent something realistic prediction in the future in terms of the market sentiment, overall sentiment, and the volume of it, and that's strengthening to the negative side. So if nothing changes, everything is staying the same as it is right now, that's what we could expect to be happening. So it's yeah, we might changing soon the direction of the main indexes, because they are technically in bull trend still, but it could be changed on a very, very short notice. Now, the risky sector is the main indexes, because obviously everybody expecting Nvidia changing the world and making one of the largest bull trend even from this moment on the market, and therefore the S&P 500 will explode to the upside and making 1,000 points to the upside, and Nasdaq as well. But in reality, as you can see, we are turning into negative everywhere. So none of the market driver currently is supporting any kind of bull trend. Not in technically, not in fundamentally, not in any way. So there is, in the people's mind, there is no more bull trend in the market. The question is how the market maker will counterbalance this one, if they want to counterbalance this one. And the best measurement for that is the options trading. So we need to keep an eye on the put and the call contract. And when we see the problem there, it's going to be the problem in the overall market. So the main risk on this market sector, mainly with the main indexes, is the geopolitics, that it spirals to sentiment and technicals, and you will see the results of that. So we are at the brink of that. That's the ETF market overall fundamental right now. The commodity market is not too bad, by the way. The macroeconomics is unchanged, but it's on the positive way, because we improved last time and we did not decline back after that. The geopolitics is remaining 1 point lower what it was in the maximum last time. No corporate earnings effect on that market sector, but the market news and events are increasing. And the reason why, because generally the commodity market is not improving in terms of market news and events, but the mining companies are still experiencing positive narratives from the news, and the energy market and the safe haven market, including silver and gold, is experiencing huge, very positive news. The rest of them is negative, by the way, but it's so much, the market is focusing so much on the positive side that it's actually fully counterbalanced to the positive direction. Market sentiment and psychology is declining from 9 points to 7 points. It's not too bad. It's remaining relatively positive, but it's declining. Okay, so we got one rush up to the upside and then we are coming back. That's a confirmation that probably we are in longer term decline in terms of the market sentiment on the commodity market, which could be interesting, because now we're going to get, or expected to get, some inflationary numbers. So we might change that direction too. Very interesting, and I'm really excited to see how it will develop in the next 2 weeks. Technicals are declining from 6 points to 4 points. Not too big decline, but it sends a signal that we are probably starting some kind of consolidation, and I hope it's not going to be a correction here. And the overall point, on the commodity market is declining back from 49 to 46. But again, let me remind you, this is relatively strong. It's a very nice and strong number right now, so we don't have to worry too much. It depends on what kind of part of the market you are playing right now. No change in that at the moment, but if we are remaining in decline in sentiment and technicals, we might get some change here. And the main risk for this market is the war itself. Now, Forex market, where are we up to? As you can see, that doesn't look pretty. Doesn't look pretty at all. So we got a point decline from minus 13 to minus 14 on the macroeconomics effect. No surprise, no surprise. Increasing inflation is positive to every single currencies, but when it's positive for the DXY as well, there's nothing you can do, and it doesn't matter how you interpret the euro and how you investigate the European economy. It will not have any effect because the DXY will drive the market. Geopolitics. Well, that seriously declines to -2, from -2 to -4. That's a huge drop in the points. Not happy to see this, but unfortunately I had to make this point change. Market events and news are declining from -2 to -4. Again, we're not on low, but we are very close to it, and I hope it's not going to happen, but it looks like it will. Market sentiment is declining from -1 to -5. That's probably the worst looking point drop. Yeah, not nice at all. Not nice at all. And we have the technicals are dropping from -5 to -7. That's a new low below, by the way. So that means that apart from the DXY, the rest of the market looks like will continue the bear market. And we talked about that so many times. That's what it is. So the overall point is declining from -23 to -34. That's a huge new low below level. And that, as I said, this represents the overall sentiment on the market, on the Forex market, which means that we just investigated the banks and we just see on the chart, the overall chart, how the banks are thinking about currencies. And that is in favor of the DXY. So that's what it is. And yeah, the only main risk is a possible DXY correction, which we could get, and people might be misinterpret this situation, but here we are with the Forex market. Stock market, which we got a little bit of insight with the ETF market, but that's not all. So we got a point decline from the macroeconomics from -11 to -12. The geopolitics is declining further to maximum -11 point. There is no more lower. So that's it. That's in terms of the stock market, the geopolitics at the moment reached the lowest possible point. This is not good. Not good at all. Corporate earnings are unchanged, but as I said, it's coming. It's coming this week. And starting with the financial world, be aware of that. Market news and events from 1 point is declining to -2 points. The market sentiment and psychology is declining further from -5 to -6. This is a new low below again. This should be a signal to you on the stock market that we had that improvement in November, December, and then January started to consolidate in terms of the market sentiment. So game over, and then we started to decline. I mean, periodically declining. So the market sentiment thinks that is game over. And the technical is joining the game, but not with a new lower low. It's declining from -3 to -4. The lower low right now is -5, so we still got space and maybe an opportunity to turn around because of any other market drivers like macroeconomics, geopolitics, corporate earnings, market events, and news. By the way, corporate earnings could be a very good surprise because if they're still able to hide numbers, this could be interpreted by the markets in a very positive way. It just depends what this geopolitical point will do with the market. Whether it's stronger than the corporate earnings or both of them going to be negative, and then we're gonna get the news even declining further. You can mark my word that the market sentiment and psychology probably going to hit the rock bottom, and that is a problem. So that's how the stock market is right now, and the crypto market is declining in the macroeconomic points from -12 to -13. The geopolitics are declining big time, 4 to 2. It's still positive, but as I said, I was surprised how the crypto market is able to react to the geopolitics, because so far we haven't got that bad news in terms of the geopolitics, but now we have, and we see the clear intention of the crypto community, and they are negative. So nothing to do with any kind of digital gold. Market events and news declining from 9 to 2 points, but it's still positive, and I'm waiting to increase this point in the week ahead as we're going in. And I would like to investigate the crypto market news narratives, because now we're going to get very important information. The reason why it's not higher right now, and the reason why it's not negative either, is because there are so many talks about the Bitcoin halving, and we gotta wait for that. It probably we're going to be a big thing, a big deal, but we gotta wait for that result. Market sentiment and psychology is declining from 11 to 7. As you can see, that's that's an aggressive drop, but it's still positive. So the sentiment itself is remaining positive. And after these fundamentals, I'm going to show you the crypto market first, so you will understand what I'm talking about. And so technicals, the technicals are unchanged at 5, which is positive. This is counterbalancing a lot of things where we got negative or negativity, sorry. And so therefore, even then, the overall point is declining from 18, which was very, very nice, to 3. That is less nice, but it's still positive. I want you to remember that this is still positive, okay? And you will understand on the chart why it's important that this 3 point is still in positive. So technically the main direction is bullish, but it will change very, very soon. I'm going to show you why. Or some of the places on the market is already changed. It's not bullish anymore. Let me just show you that. We still have this loss of momentum into the trend direction, but whichever asset already changed from bullish to bearish is gaining momentum at the moment. The surprise could come from the news and the geopolitics, and the risk sectors are the altcoins, and the main risk for the altcoins is geopolitics. This is how we are with the crypto market right now, and I promised, and I want you to understand why and how. So let me show you the crypto market for the pro members on the technical chart, and then we're gonna go through or every other market sectors after that. So